The USDA brought new numbers, reducing the output in the United States after the shutdown. Jerry Gidel is ready to assess that and more right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we have had the USDA updating its number after 44 days of a shutdown in the United States, the longest shutdown ever. And so, did you expect these numbers? I think it was not surprising that they would reduce the yields.
Oh yeah, they reduced the yields, but considering uh, the trade expectations in that, and they weren't all that dramatically different than the trade's average estimates. But the tricky thing in this thing is that the uh, U.S. yield numbers, which always catch a lot of attention here on these USDA monthly reports. And since we don't have a monthly report, and that last month, then it even came even higher. This 100, uh, excuse me, 186 bushel yield, just down uh, just 7/10 of a bushel from last month. Definitely uh, wasn't. Where I was looking, and the trade was looking for just a little bit less. They were on things of going forward here. So the uh, and the interesting twist on it is that actually looking at the corn number, they actually increased their demand exports because we're really off to a super star push here on corn, and that doesn't really include a lot of Chinese buying to this point. But I think everybody's looking at these long-term prices here being, or these current prices being at long-term kind of values, and that I think they're really looking at that as a positive. And that the other feed demand numbers were left unchanged on feed and ethanol and things like that. I thought maybe they might increase feed ethanol numbers a little bit, but the biggest key thing was is that. Back in the September stocks report that came out just before the shutdown, they had a significant decrease in the feed number here by over 250 million bushels in that, which is quite interesting. I kind of feel like that back at the time they only changed the production number by about 25 or 50 million. I think that's probably a little erroneous here, that the last year's crop size was probably larger than the 179 bushel yield that the USDA has been carrying for a while. That all being said, though, the overall number, since uh, the comparisons all the way back to September, is the fact that we just had a smaller uh, crop size here by approximately 60, 70 million, and so that in itself here, along with the expanded exports, actually is just a minor increase here of 75 million bushels. It's surprising, the corn number really slapped down here today pretty dramatically on that scenario for the corn. Uh, from there, the USDA, of course, also updated its soybean numbers here, in that they did take down the expectations here by half a bushel to 53 from the September level, and that uh, did end it decrease the output of the U.S. crop by about 45 to 50 million, and that. But the one thing that they did do, and it's kind of surprising, is that considering the fact that the Chinese supposedly has agreed to be a buyer here of 12 million metric tons here in short order, which there's been a lot of commentary this week, and even from one Chinese official that hit the wires here uh, about the fact that there wasn't this strong a commitment from the Chinese side about a rapid, because they have all kinds of beans from South America. They really don't need more beans, and that in the short term, soybeans, I should say, from there. And so I think that's definitely a head scratcher, considering the fact that the uh, administration has been touting the fact that the Chinese are going to be a big buyer of beans, but they went ahead and still decreased the U.S. export sales for the coming year by 50 million. And so that compensated for a lot of the half a bushel decline in the U.S. yield and that. And the one thing that probably is going to be pretty solid here is the expanded uh, renewable diesel, which utilizes soybean oil in its processes for that. So that's going to stay the same. Exports is really the big fluctuation on this thing. From there, I guess we're going to find out uh, if the producer out there feels as confident about the USDA's yields as some people in the trade. I think even the trade at this point has been a little baffled by uh, the today's numbers with the
Yeah,
considering.
we have had minus 24 cents for corn and for soybeans and minus 11 for corn. So, how do you
Is
think,
that
yeah, the market's going to play out in the coming days?
well? Over the weekend, it's always an interesting thing as people start to reevaluate and look closer on these things. They had their immediate knee-jerk reaction right off the bat here after the announcement, and that, and both of them kind of hit some of their big lows for the day. They did bounce in the midday and then come back towards the close. From there, I'd have to say that right now, at least. On the corn side, I think there's still going to be some demand out there for shipments that are already in the books. We haven't got a great idea as to, we've got a lot of individual sales here that were announced separately today, but overall, our export data is only going to be one additional update per week here, so that's going to take a while to get us back up to snuff of where we're at right now. It looks like it's going to be January 1st kind of numbers before we get ourselves back to the current level and that. But I sense that there's still uh, some support in the corn market despite its substantial yield here at this point. From there, the beans are going to be really tricky as to are we going to have a chance to see prices stay in this 11 and a quarter to 11.50. I suspect that we will see some weakness in it. I did recommend some people to sell another 10% here going into this report from the standpoint that these are good values. Unfortunately, the basis levels stink, but it's better to have some cash in the pocket for Christmas. And so that's an interesting one. I have to say, though, the focus is definitely going to be in South America. There's some tricky things going on down there. Argentina seems to be in decent shape here about their uh, uh, spring season down there. The one thing that they're kind of waiting on additional bean sales, of course, is they plant a lot of double crop beans in Argentina. So, uh, and that, and they're at this point at least, they are going to be planting. They've planted more or anticipated to plant more corn, and I think they have. And that, and then on the South America at this point, there's some dry spots that have reduced the planting progress down there. Basically, uh, Goiás, the Minas Gerais, maybe even some parts of Mato Grosso out there, and then of course the Northeast. So I kind of feel like that's going to be a factor going forward. South America weather's there, but the one thing that right now, without tightening up our carryover stock closer to 250 million, with our 290 that they came up with today, I kind of feel like this thing's going to get a little choppy. December is not a great month. I think for prices that normally a lot of the exporters are shut down and they have their we just move stuff we've already bought along the way. And then we're looking for the final production numbers there in January. So
Yeah,
right
we
now, at
have
least,
had
I take
yeah,
advantage.
we have had this new trade deal between the US and Argentina, and I think this will consolidate the fact that Argentina will be supplying more beef to the US.
Yes, that's part of it. That expanded number up there to 80,000 metric tons, and that interesting thing about it is that that's really a very minor part. It's more psychological than it really is reality of and that. But it is an area here that's really price sensitive, which most of that beef coming in will be utilized for hamburgers or lower cut scenarios, and that's going to be able to keep a a lower cut or lower price point scenario on hamburger in those cuts, and so that's going to make a psychological the reality that that's going to end up expanding U.S. Primal cuts and also all of a sudden reduce our prices, and that's still a long ways away. But unfortunately, sometimes psychological and levels have as much impact as actual physical levels of changes of supplies.
Yes. So, yeah, what else would you like to add for next week?
Well, I think we definitely got to keep in mind of where the South American crop sizes are going, and that uh, on corn and soybeans. One thing we didn't touch, and we probably should do a little touch on wheat, and that the production changes were kind of made out there back with the final production numbers in September, and that the one thing that has come along on this thing is that increased supplies of winter wheat is going to be kind of hanging over us. But the one, there's lots of indications, by the way, when we get our December uh, winter wheat plantings number, which is about well, actually, that's not going to show up until January, but that particular one, there is some psychology and or some ideas talked about in wheat here about the U.S. planting numbers, primarily if some of the dryness has kind of been in the Southwest, along with the price points, and that we could see, you know, 1 million acres less in winter wheat seedings. That's not going to be a big deal. The wheat market is determined from what supplies around the world at this point. Different opinions coming out of the Black Sea area, maybe a little smaller Ukraine crop. The Russian crop has a bad spot, but it's overall got a good sized supply. Uh, right now, the Australian crop, which is the one that's going to be harvested right now, it looks like a very good crop. So right now, at least, wheat market could use some excitement around the world, but right now it doesn't look like that it's going to grab a hold of it. So we're going to kind of struggle with uh, that. But it's important to keep an eye on that kind of stuff because if we get any big changes longer term, it usually starts in the wheat market, and so we'll keep an eye on that going
Time to
forward.
sell
But
wheat.
yeah,
Time to sell wheat.
um, could be. It hasn't really did much of a seasonal rally. I was hoping to see a little stronger performance here uh, from the standpoint of the market. But yes, uh, we've already sold about, I think, 15 to 20%. Probably not a bad move to add another 10 or 15% on there at the short term. And we'll see if, uh, utilizes any bounces we might get. And I think there could be a few here going into Thanksgiving holiday. And that there's a big push to try to get stuff organized and getting ready to go down the Mississippi River uh, at Thanksgiving. And I think that's still going to be around. But after that, it could be a quiet one for the Christmas holidays in the month of December.
All right, thank you very much, sir.
You bet. Take care. It's kind of a wild one today on the USDA. They seem to be pretty conservative in their expectations here on changes in the crop size, despite some interesting weather we've had this last year.